Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Info Edge, which, in my opinion, is one of the best internet companies that is available today in the markets. So let's understand the business and let's understand whether you can invest at the current levels or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about InfoEdge, here's a small request that kindly support me through Patreon, and once you do that, it will help me grow the channel better here on YouTube, and I'll make better videos. The membership begins at only $2 a month, and you can ask me any number of questions when you become a member. And I'll also provide you with the help on your portfolio and help grow your portfolio further. You can also do UPI payments. For that, you need to email me directly, and I'll help you go through the procedure. Thanks a lot. Now about the company. InfoEdge is formally established in 1995 and they acquired major online brands like Naukri, Zomato, 99acres.com, Jeevan Sathi and Shiksha.com. They are the major brands, but they have others as well. And over the last 6-7 years, they had masters the art of you can say acquiring online brands and minting money from it, getting a lot of revenue. They are the leader in this space, and they have continuously increased the top and bottom line numbers and stake in major companies. The market cap of the company is around 27,000 crores. If you look at the numbers of InfoEdge, this is Q3 FY20 versus FY19, and you'll understand that the sales have been around 15.5%. That's the growth, and the profit growth has been around 25%. Even in difficult economic scenario, they have come up with 20-25% profit growth, and this has been consistent over the years from the company, and that's why the valuation is huge. Plus, it has a valuation premium because of the kind of business it is into. Not many such companies are listed at the moment. In fact, I believe that it is the only such listed company in the Indian markets. They have a relatively low return on equity of 4%, but the operating profit margin is pretty robust at around 20%. If you look at the performance of the stock has given smart returns till February of 2020. In the last 2 years, it has gone up something like 2-3x. But over the last 1.5 months, it fell pretty sharply, and we have seen a 35-40% dip as with other companies as well. It has a strong leadership brand and a strong brand in itself, and that also goes a long way in having a higher PE in the market. The management is very good, and there's no issue of corporate governance or any issue of any kind that has taken place over the years post listing, and they are very transparent in bringing out numbers as well as any corporate announcements. The margins are low, so we have seen that ROE is low, and that is a negative, and that is where the company has to look at increasing the margins and increasing the amount of money that they get into the you can say business and coffers quarterly. So they need to increase the cash as well. uh, as I said, it has declined around 35-40% from the peak. It has reversed again. So by the time I'm publishing this video and from the time I was making it, it has reversed from around those 1900 1800 levels to around 2500. So it has come back sharply and currently down around 20% from the peak. So again, that shows the pedigree of the stock, that how quickly it can rebound. So it can make new highs pretty quickly and much earlier than the markets itself. It is a kind of a monopolistic business, and not many businesses, in fact no business of such kind is listed in the Indian equity space, and that is why it is commanding such a premium, that it is currently having some of the marquee brands of the online space. If you look at the technicals of the stock, then there is strong support around the 2000 levels, and the short term support is around 2150. So currently the stock is trading around 2500. What you can do is you can have a short term stop loss of at the 200 DMA, which is around 2350, also if you want to trade in the stock. But if you want to go long, and I believe you can buy it for a 5 to 7 year time frame depending on the quarterly results, then you keep a 2000 rupees stop loss and keep buying into the stock on any 4 500 300 point market decline. The major breakout is expected about 2450 2500, at which point currently the stock is. But since the market is expected to fall a bit in next week, then I believe it will be a great opportunity to accumulate this stock from these levels. That is the current market price. The current levels of info edge is pretty good to buy it, and going down, if the stock goes down to around 2000 1900 levels, or even at lower levels, you can buy into the stock. And probably over the next 2 years 3 years you'll make very good money in the company. Although the next 1 year, next 18 months could be difficult, next 6 to 7 months could be difficult, but then the stock will rebound very quickly. So what needs to be done? I believe that this is a stock which is expensive, and many people are talking about it, that it is trading even after falling at around 50 60 times, and when it was not falling and it was trading at 90 100 times earnings. But this deserves to be trading at such valuations. Uh, what I feel is that these companies do not go down like on the PE basis. So the PE doesn't shrink. Companies like Gillette, DMart, InfoEdge, and you can say other companies like Nestle, etc. For these companies, the PE shrinkage is very less. So the PE, if it was 100, could go down to 70, 75 at the worst of times, and then the PE would again rebound back. So yes, 100 is unsustainable, but in the longer run we have seen that MNC companies like Gillette, etc., trade at around 80 85 times. So that is a stabilizing PE for, I believe, InfoEdge as well, with the kind of business that it is into. So if you get it at around 15 20% discount to that PE level of 80 85, so probably at around 68 65 times earnings, you go ahead and buy into it. And anything less than that, you buy into it big time. These can be very good, you can say, money churners over a 8 10 year period. These stocks would grow at 18 20% easily over a period of time. Might not go 40 50% yearly, and might not be a multi-bagger very quickly, but when you see after 8 to 10 years, then this would have gone up 4x 5x. So these are such companies of the like. So don't look at the price every day, look at the business, how the business is doing every quarter, and look at the price relative to the business and the potential, and then get into the stock. So these stocks will always be expensive, and in which you have to buy at you can say either close to highs or any 15 20% downside from there. And that's why the stock has recovered pretty magnificently from those 1800 1900 levels that we saw in March, and currently trading at 2500. So it has recovered something like 25% from the lows, although many stocks have not recovered. So we have seen in other businesses. So this is why I believe that one should get into the stock. Second thing is FII DII holding is big in this, good promoter and institutional holding. So this is another reason why I like the stock, and the business structure and the kind of business it is in. It is a new age business that will continue to grow further as we go along, with the online stream coming in, that people wants to work online, etc. These companies will do really well. So a very good long term bet. So this was my video on InfoEdge. Please like and subscribe on channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.